Welcome to Charts Today. My name's David Linton, and today's edition for Monday, the 24th of October, comes to you from Indonesia. I'm on my way back to Europe from Australia. Markets are looking quite mixed here, with Asia already open, waiting the opening in London. So looking at the screen, we've got quite a lot of green on the screen. And we start by looking at the currencies. The dollar index still looking very strong on the long-term chart. Remembering our big call for 2022 was that it would be the year of the dollar. Very much what has happened. We're up some 20%. Seeing a little bit of a fallback there on Friday, but the reality is the medium and long-term trends are still bullish. Better week set ahead for the euro. We've got some upside targets to the short term. We did nudge that 99 level today, so that's quite key, but of course we are still medium and long-term bearish with some very big downside targets. The Japanese yen, of course, has been the big story. That nudged 150, making a 32-year low against the dollar. Seeing intervention here, and that's really what's having that short-term effect on the dollar. The Bank of Japan clearly intervening, but realistically, these targets are there for the upside, so we can't ignore them. Sterling, of course, is very linked to what is going on politically in the UK this week, and that means a lot of uncertainty around the currency. But of course, we are still long-term and medium-term bearish. Remembering this is my weekly and my daily and my 60 minutes, so my long-term, medium-term and short-term view of the market. So for the moment, sterling is seeing a little bit of respite against that weaker dollar, mostly driven by that Japanese yen intervention. But the reality is we are still bearish, and some downside targets to parity on sterling, so we can't ignore those. Against the euro, sitting at 115, again looking a little bit better. We did nudge 116.50 in last week, but the reality is we are still medium-term bearish there, having spiked below that 110 level to 108 on that mini budget in the UK. Looking at Bitcoin, we are sitting fairly flat below $20,000, and realistically, it's game over for crypto whilst we're below 20,000, and we are just struggling. Now, looking at the markets. Interestingly, I'm running on a Refinitiv Icon, and interesting, the S&P 500 index has been discontinued. So I've actually added it in from Yahoo, and this is one of the benefits of Updata. I'm running multiple data services into my system, so I can run lots of different data services, and just going and configuring those data services, you can literally choose from dozens of different ones. Some are paid and some are free, and so that choice of data is what really gives Updata its power. So looking at the S&P 500 index, I don't have intraday data on this Yahoo chart, but I can see here the weekly chart, and that 3,500 level is pretty critical. The Nasdaq, I still do have the historical data, and the interesting here we see how the 60-minute chart is looking more bearish there, and we're actually just watching the charts just making lower lows. The futures today, we're seeing the S&P future actually up slightly, and the same for the E-mini. Looking at the FTSE future, we're up 0.25% on Friday, so waiting for the Monday morning open there. Again, medium-term bearish, just struggled below that 7,500 level. The UK index heavily laden with the oil majors, which has held the UK index up relatively well, and the weaker pound, of course, helps dollar earnings companies in the FTSE 100, of which about a third of FTSE index in the earnings are foreign currency. So that does help in terms of UK earnings. The DAX in Germany is still weak. That 12,000 level is now the critical level. We have bounced back, and we did regain 12.5, which was a fairly critical level, but the reality is we are still long-term and medium-term bearish with downside targets. Looking into Asia now, we've got Japan actually up 1%. The Hang Seng has been making 12-year lows, and that really is just falling away, bearish on all three time frames with downside targets given and being met. You just cannot ignore these targets, the 1%, 0.5% and 0.1% on the 60-minute, giving us those targets to play for. In China, the Shanghai index is down 1%. All eyes have been there on the politics as well. And if we look at the Aussie market, we are actually up 1.6%, a stronger showing there. And I notice that my Aussie shares are performing quite well today. We'll look at the energy mix in a minute. Looking at some of the soft commodities, we've got wheat up a further third of a percent. That trend building there, the long-term trend still bullish on the lagging line above the cloud. We had this upside target of 930 that was met. So again, the target's there, but for the moment we are just testing in the cloud, and short term we're just getting back above the cloud. So soft commodities still looking long-term bullish. Corn actually again just getting back above the cloud there. Gold sitting at 1652. The gold bulls are being thwarted at the moment. Just can't get back above that $1,700 level. We are in that medium and long-term downtrend. We do still have big upside targets for gold, but interestingly, some of the targets are being negated as we make new lows. So it will be very interesting to watch what gold can do. But for the moment, it's bearish on the charts. Silver similarly couldn't just get back below that 20 level, so looking quite a good jump there on Friday, so starting to look a bit more interesting, but again that medium and long-term chart still bearish. Looking at the, in fact, we look at copper, and again, this has been quite a mixed picture, and we are just seeing there, we have that short term, but no clear targets on the short term. Copper needs to really break back above the cloud, and until we can get above that sort of 380 level, not really quite key. US 10-year yield sitting at 4.18%. No big surprises there. In terms of US tech majors, the main thing is Apple. We need to hold that 130 low held back in June. We're currently doing that, and this is really what's just holding the market up. There's biggest stock in the world to really be watching, and it's all eyes on that 130 level. So that's a level to watch. But for the moment, we're looking stronger away from that. Now, looking at the energy mix, we've got Brent crude. It's up slightly this morning. This downtrend on the daily is starting to actually just break a little bit, and we are seeing here on the 60-minute chart, we are a little bit more bullish there as well. With targets to the upside, we put out our call for the week ahead and for today on crude oil, so that's in your systems when you log on. Looking at WTI, that's also looking a little bit better with upside targets, but for the moment it looks bullish today, neutral for the week. US nat gas has been on a really clear downtrend, breaking that 5 level. I rarely use the channel function in Updata, but we see here that we actually are on this really clear trend channel, and that's 2 standard deviations from the trend. We really are in clear territory there, with downside targets still to play for on US nat gas, hence we've gone out as bearish. Coal actually just struggling to hold that 250 level, so that's quite key. Emissions actually looking better today. We put that out in our reports with the upside targets, and gas prices having found a floor, we just need to hold that floor, and again that's out in our report. And the other one that's been really quite interesting has been German power, and again we have given targets for German power. We've got new price targets kicking in, and that was in our reports as well. That's it for today. Until tomorrow, we'll be in Thailand. Until tomorrow, happy charting. See you then.